What is going on, everybody? It is March 6th, 2024, day log episode over NQ and the trade review that I took on live stream today. So if you guys were in attendance today and this whole week, I hope you're all able to gain the perspective of patience, how to learn to trust it, trust in yourself, trust in the model, and in the concepts that we've been taught. And there's really only one way you're going to learn that is through experience. And you're gaining experience, even if you're not taking these trades or being a part of everything in the session, you're still learning patience and how that plays out and how to trust that. Because if you don't see that, then obviously you can't trust it. But hopefully it's been a good learning experience for all of you this week and the last couple of weeks. And obviously, if you've been here for the last 2 months, you've seen me do this basically every single week. And specifically this week, I've dialed it into where I only wanted to take one trade due to NFP this week. So some weeks, I mean, even last week I took 4 trades in total. The week before that, I think I took 4 trades. So some weeks I take more. It depends on the profile for the week and what I'm looking at. But ideally, this is the ideal situation, is where I'm only taking 1, maybe 2 trades in an entire week. And it's called, if you're not familiar, a one shot, one kill type of profile, where you're looking for an intraday run or even a swing trading type of style, where you're looking for a one shot, one kill day of the week, and you can hold on to that position, and that will satisfy the entire week. Rather than me being inside of the market and taking, 5, 10 executions throughout the week, I only have to take 1. It depends on your style, the patience, and the personality traits that you have. But I've elected to trade this style. I've become very comfortable with it. And hopefully you guys have all been able to see it, learn from it. And if it suits your personality, that's amazing. I don't know what's going on with this kind of, I'm looking at it, it's flickering. But overall, let's go over the trade review today. Let's get that down first, because I had a lot of questions over it and why I was thinking that. So let's go out to the weekly time frame, and at least in the moment of time, what I was thinking, where price was at. So in the moment of time when I was taking the trade, I was highlighting the weekly time frame bullish order block here. And I was mentioning the idea how price came down into this and tapped into the mean threshold of it. So if you just take the body to body in here, mean threshold, price is touching that. And what I'm annotating in my mind, or even out loud during the session, is, well, Tuesday, which was yesterday, could have been the low of the week, which is a weekly profile given to us by ICT. If you're in a bullish week, you want to see the low of the week printed on a Tuesday inside of a higher time frame inefficiency or PD array, which in this instance, it's the weekly bullish order block. So that's what's running through my head. When I went down to the daily time frame, I was looking at how price yesterday revisited this inefficiency here. Doing what? Dropping down into a discount. So this market structure, when we look at basic market structure on the daily time frame, this is still what? Higher highs and higher lows. So from this dealing range low all the way up to that high, price is reaching down into a discount. So this equilibrium level there, prices are reaching beneath that yesterday, printing possibly the low of the week to me. In that point in time during the session, that's what I'm thinking. Inside of that weekly time frame bullish order block, the mean threshold, price is dipping down into that CE of this reclaimed bullish fair value gap. Order flow is still bullish. Now, yesterday I was mentioning the idea of how this could have been a potential reversal at the top in here due to a few factors, but until we break this low, until this is broken, I can't confidently call shorts. I can intraday trade shorts, but in terms of holding for a long-term positional view, until that low is broken, I can't really call for that. This short-term low in here, if this was broken, then I could possibly look at that as a short-term market structure shift. But as terms of parent dealing ranges and parent order flow and what structure, parent structure is really what I'm trying to say. This is the parent structure, that dealing range low up to that high. So with those two factors, I'm looking at, okay, well, those are higher time frame areas of interest and PD arrays. So that's going to take precedence and importance over all the lower time frames, regardless of what they're doing. Now, if you looked at the SMT between the three, and I mentioned this in real time. If you looked at yesterday and you looked at Dow and you looked at ES and Q, there is a small bullish SMT divergence. So I was observing these lows, how some people were probably asking, well, why didn't ES take the low here? Why didn't NQ take the low? Well, sometimes especially if this is happening, these lows are happening inside of a higher time frame inefficiency or order block on the weekly, it doesn't necessarily need to run the low. And especially if Dow is taking out its low here. So compare this low at 1300. Look how ES didn't take it. So I'm comparing this low. If you're wondering how to use SMT, I'm comparing this low at basically 1 o'clock at the bottom, and I'm comparing the low here at 1300. So what did Dow do? Dow took it out. Dow took out the 1 o'clock low, while ES and NQ failed to do so. That's a bullish SMT. When two asset classes are diverging, and one is doing opposite, that's a SMT divergence. And what is that telling me? Well, that's telling me that if I start combining these confluences, again, trade ideas are recipes. You need to combine a bunch of different ingredients to get a good recipe. So I'm combining these different ideas, and the other kind of ingredient inside of all of this, what I'm looking at, is dollar index. I mentioned this multiple times throughout the session, is dollar index is dropping off lower. It's hard for me to want to short NQES if dollar index is dropping off heavily. So I mentioned throughout the last previous logs and live sessions how dollar index hasn't been as much use to me because it hasn't been volatile. But when we do move in a decently volatile manner, it impacts the index futures markets, and it actually makes everything easier. I'm telling you, dollar index is a golden goose. It's beautiful to utilize. I don't care what anybody else says. You only need to focus on one market. Intermarket relationships is confusing. No, it's not. You just don't want to put in the work to figure this stuff out. When you have these type of confluences, it's not hard to read this. I know where dollar index is trying to gravitate towards. If dollar index is gravitating lower, then I have to call off shorts on ES and Q. And that's a reason why you saw a lot of people get stopped out on shorts today, because they kept chasing these shorts. And I'm looking at dollar index going, well, I'm looking at the higher time frames on NQ. That tells me it's bullish. Dollar index is dropping lower. That tells me it's also bullish. So I can't go short. So these questions of, CJ, what's a high probability fair value gap? The things I just told you will create a high probability fair value gap. That's telling you the things that will make a fair value gap work. Otherwise, if you're not combining these things, you're not looking at it, you're just trading blindly. These type of things are important. That's the reason why I state them, the reason why I teach them. And all of this is coming from ICT's mouth. He taught this. If you go back to even last year through his live streams, he's teaching the exact same way I'm teaching. So it's very, very important you do this. I'm constantly looking at all these asset classes. I'm looking at the higher time frame. I'm looking at dollar index. I'm combining all of these things to then plug in a simple skeleton model, which is like an example of a 2022 model. But a 2022 model alone, without all this information, is useless. I'm just trading it blindly. This gives me confidence and direction in it. Time of the week, time of the day, time of the session. What's the economic calendar look like? These things are important. You have to make sure they're aligned. It's not just, rate on sell stops or buy stops for value gap and boom, bada bang. That's not how it works. In the beginning, yes, it's easy. It's good for a student to do that, to practice, but more times than not, you're going to get stopped out because you're trading it blindly with no GPS, no roadmap. You don't know when price is going to turn, when it's not. So I'm covering my thought process throughout an entire trade idea. When somebody asks me, what's your A+ setup, or what do you look for in a trade? Well, I'm looking for all of these things. They don't all have to be there all at once, but for the most part, they always are. So if you're wondering how to be an actual analyst, this is what it takes. And to me, once you get it down, it's not that hard. To me, technicals and all of this has never been that difficult. It's always came pretty easy to me. And I think for most of you, it probably does come pretty easy. It's the hard part is yourself and being able to handle yourself and manage it. Overall, today, there was the Sibian here and the bearish breaker to the left of us. So I was actually looking at both sides of the board today. I was looking at both options. And I know this may be confusing for some of you, but I always teach to keep an open mind to one side or the other, because if you don't, you'll probably end up getting blindsided. But you have to wait for enough information to invalidate another side. And whatever side has more evidence and whatever side has more convicting evidence, then you trade that. So in here, this is a bit of a whipsaw day, and this is what you have to anticipate with NFP week, especially rolling into a Wednesday. That's the reason why you really want to cut it off by Wednesday AM session, because by then price is going to get really wild, and the precision, the accuracy throughout the rest of the NFP week is not going to be easy for a lot of people, even myself, even for ICT. It's the reason why we don't trade it. So I was looking at both sides of the board today. I was looking at this bearish breaker. I annotated it in the live stream. I was looking at this SIBI in here. I was saying, well, I could see that argument in here, but to me, in the moment of time, I really only wanted to elect to go long. And solely, if dollar index was rising today, if it was moving higher, I would have called shorts, but it was moving lower. So I have to elect to sit on the sidelines until I get a long setup. So this was part of the trade idea in here. I may not have mentioned it, but the 4 hour, this bullish fair value gap in here, we dipped down beneath it and gravitated higher. When you look at the 1 hour time frame, take this away for a second. This one, the 1 hour time frame, we had this SIBI here. So when price reached down into it, when I took the trade, price looked like this. Price was reaching down into this inversion. So I'm paying attention to that. And what's the dealing range? Well, from this low, this is the bullish dealing range. From this dealing range low up to that high, price is dipping down into a discount. So I'm looking at this dealing range. I'm not looking at that one. So this is the bearish dealing range. I'm looking at the bullish. If I'm looking for long setups, I need to be looking at the bullish. There's a SIBI in here. Even though we sold off of it, I'm anticipating that we're probably going to run back above it. And ultimately, I really wanted the relative equal highs up here, which we didn't even end up tagging. And that's fine. That's, again, with NFP week, I'm not expecting really precision. So when you dig down to these lower time frames, you have sell stops being ran in here. Again, if you refine everything up from that 1 hour I just mentioned, what's the SIBI? Extend that out to your right. That's going to be an inversion. The algorithm still refers back to this. Everything from the left side of the chart, you can extend out to the right. So we had a news event driver 30 minutes after the open, and that's what I was waiting for. I'm not going to be trading before that. That's my set of rules. My particular mindset is I would rather just let that play out. If I miss a setup, oh well. And most of the time I never do, because usually the news event driver sets setups for me. So in here, this was before the open, then the news event driver released at 10 a.m., took out sell side, reached into the inversion, reached into the discount from this dealing range low up to that high there. So what I'm doing here, I'm going down to a 5 minute. I'm looking at how we took out multiple levels of sell side. And what I'm waiting for is, I'm not looking for a shift in market structure. I'm waiting for a change in state of delivery. And this is the way I view change in state of delivery. That's not the exact definition. It actually has to do with order blocks. But the way I'm looking at it particularly, and what I've seen with my own studies, and the things that have helped me, is when I'm looking at, okay, well, I want to see this thing shift higher. What I'm looking at is I'm looking at that first bearish opposing PD array. So when we're residing in here, right, when price looks like this, I'm holding off on the idea that, okay, price can move higher today. That's what I'm looking at. All the confluences are telling me that price should move higher today, but I have to wait for that confirmation. I can't just go long. The thing I'm waiting for is I'm waiting for a clear shift higher. I'm waiting for some type of direction to be printed. So the best way to do that is to look at opposing PD arrays. In this instance, I'm looking at this fair value gap in here, and I'm waiting for this to be closed above and then treat it as an inversion. Because if we close above this, what is that telling you? It's telling you that it's no longer respecting bearish PD arrays. It's no longer respecting bearish prices. And now we're closing above it, and we're going to respect it as bullish. So I beautifully outlined this throughout the entire live session. I annotated it and highlighted it. I made it our sole focus. Now, if you dig down into the 1 minute time frame, take a few of these things away. There's going to be a lot. I'll just delete it all. Now, let me see if I can actually pull up the side-by-side chart. That way it's all clear. So in here, that's that 5 minute SIBI. This is where the 1 minute will give you entries before the 5 minute will do something, but the best thing to do is wait for particularly a 5 minute. Not always, it's situational, but it could be the best thing you can do. So what I'm doing is, this is the first SIBI, right? So we took out multiple levels of sell side. I'm anticipating higher prices. This is the first SIBI. So I'm not selling off of this. That's not what I'm doing. I'm standing on the IDFs, drawing the line in the sand. All right, I'm looking for higher prices. So as soon as we break above this, all right, well, now what this is telling me is now it's shifting from bearish to bullish, right? It's no longer respecting that. So the inversion plus these inefficiencies here should be held. If it drops beneath that, then obviously I'm wrong. But guess what happens? I'm protecting myself by paying attention to the 5 minute, because the 5 minute is the parent to the 1 minute. Sometimes the 1 minute will do this, and then the 5 minute is respected and it'll drop off lower because it's the parent. The parent, everything else underneath the parent, the child time frame, will be insubordinate to it. It will bend its knee to it, per se. So really, the 5 minute is a really key time frame for me. So in here, I mentioned how I could have entered on this first run in here. If I wanted the absolute best risk reward, I wanted the best, entry, but you risk potentially being stopped out by a premature entry. And I've shown the cases before where I've waited for the 5 minute to close above and it never did, but on the 1 minute it closed above it and then it traded through these BISIs, and I protect myself from a potential loss. So in here, what I'm waiting for is the 5 minute to close above it. And if I can highlight some of these things, eventually we get another shift above this high here. And guess what that is doing at that particular point in time? It's closing above the inversion. So what I'm doing is, all right, well, we closed above the 5 minute inversion. We got above. It's shifting market structure here. So where's the point of interest where I can enter? There's a fair value gap here, right? And then there's a small inversion there, which I annotated in real time. And I'm looking at the 5 minute as also sort of an entry pattern. My stop loss needs to go beneath the CE of the inversion, which I mentioned in real time as well. Price dips down into it. So I entered in this fair value gap here, and that's why we pay our stop loss and we manage it well. My stop loss was going underneath this low in here, because that was particularly underneath if you look to the right of you, look at where the level is, 1809. That's way underneath the CE, and it's underneath at least 2, if not 3. This down close candle there, it's not being really highlighted. This one here is a bullish order block. So it's 3 PD rays in the way. Particularly if I can have that, I'm going to utilize it for a stop loss. Then price tears off higher, and I was just continuously pulling off partials throughout basically the entire day or entire session. I'm fairly not upset, but I really wanted, I highlighted the drawn liquidity, which was here, and I was holding out for one more contract to get up into that. Eventually we just went sideways, and then I got stopped out on my runner that was trailed up. So I trailed my stop loss. My entry was down here, but I trailed my stop loss in profit to this low in there, because I was anticipating at least for this inefficiency to be held. And that just happens sometimes where you can't always predict where to trail your stop loss. And I'm not trying to give up that much room. I could have trailed it probably underneath this one, but I'm happy with it. It was 50 plus handles in profit. So I can't really be that upset, right? But I wanted to showcase all of you that you really can hold out for runners, and you can be patient enough for this. And ultimately ran to my targets. So we dropped down lower in here. For your study, and this video is getting a little long. And for your study, go up to the 15-minute time frame. We dropped down into a balanced price range in here, built relative equal highs, and then blasted off above them. So pretty cool overall. My targets were delivered. If you guys were looking at it, this was my overall target, and that was going to be a nice 100 handle trade. It was going to be a monster trade. I really wanted to do it, but again, I can't be perfect, and it doesn't matter. Perfect is not required to be profitable. So I'm not going to make this video any longer. I could keep going on, to be honest with you. I really could. I could talk about the RTH gaps right now. I know that was part of my bias as well. There's so much that goes into a trade idea. There's so much that I can put into this video, but it's going to be way too long. And this is where just sitting with me with a live session over time, you're going to start learning these things. I do the same thing practically every single day. So that's what is required for a trade idea. I know it seems like a lot, and you want it very simple, And this is simple. Once you understand this and once you get a grasp of it, once you start riding like a bike, you know, it's hard at first. You need training wheels. You need to do little things at first, but once you get going, once you start pedaling, it's like, this is easy. The only thing else you need to manage is yourself. That is the hardest part of all of this. But once you get this tech tools down, you understand, you know, what you should be looking for in a trade idea and what you should be waiting for. I mean, that's easy. To me, I always trust it. I have very good trust and patience within myself because I've seen it work out so many times. And the best thing you need to do is just trust yourself, trust your model, and just keep working through it. And if you know, if you had a hard day today, hopefully you're able to learn from this and learn from my live streams that this is possible. You can do this. Throughout all the hard times, the struggles that I've had, I never lost faith. And that's really the main point for all of you who are watching this and listening to me, is that if you keep going, you keep pushing, you can be successful. And that's really the example I want to set. So that's gonna be it for today's video. Until tomorrow, I'll be live streaming 15 minutes before the open. Good luck and good trading, everybody.